45-minute session is we're going to go over technical analysis and like a top-down analysis of how we find a good trade setup. And also, I want to focus a little bit more on like the exact entry model that Sean here uses from his top-down analysis. Like, yes, we can come up with a bias on the higher time frames, but how does that look when we're looking at the 5-minute chart? What type of candle price action can we look for to signify, hey, this might be a good time to enter the market? Okay. And another couple notes that I should say before we start is that Sean here trades his own capital. He doesn't trade prop firms, but he did start trading prop firms last week, right? And I got him on a prop firm called Take Profit Trader. Explained to him how consistency works and all that. It was all alien language for him. He managed to take his right, yeah. He managed to take his trading strategy, apply it to kind of my risk strategy when it comes to prop firms. He passed his first eval, first try, in the 5 minimum required days. And then the first day he got his funded account, he hit $5,000 of profit on his 50K funded account, which is ridiculous, right? So $130 investment, $5,000 return. That's pretty fun, I guess. That's easy.
Yeah.
That's easier than hitting it big at the casino, right?
Exactly. I like those odds.
Yeah. So we're gonna look at that type of strategy that Sean uses, and that's why I like having Sean here as well, because the way he trades is just it does so well in the prop firm setting, and he just proved that this week. It's hard to find traders that kind of align with prop firm trading models, because you have traders that might have huge high risk reward type strategies or crazy scalping strategies, which don't tend to do well in prop firm settings. The best type of trading that does well in prop firm settings is day trading, and having a reasonable day trading range where you're in and out of the market within an hour or 2 or 3, depending on the volatility. And that's it, right? And that's the way Sean trade. That's the way I trade. And that's what I feel does the best long-term with prop firms. So, yeah, so let's start getting into this, Sean.
Right.
Also, how has your week been trading so far? What assets have you been looking at?
I've been well, gold, traded some silver today. ES, for those that follow my trades in my channel on your Discord, I put up that mean reversion short of 6,100 last week, and then the market's kind of suppressed. And then when we reapproached that level, I alerted everybody that it would probably, I alerted everybody in the morning that's probably going to hit during the day, and it did, and that paid massively. So,
yeah,
took
and we also right.
The
And we also have a channel in the Discord with Sean's trade setups, and he posted some of his high quality trade setups there. The last 3 have been beautiful trades, like 1 to 2 and 1 to 3 risk to reward setups, and they've just hit very, very clean. I posted it in my carousel yesterday, but if you guys haven't checked out that channel yet either, I'd highly recommend looking at it just for some trade ideas for yourself. And I am going to share my screen here. Oops, okay. Let's go here. There we go. All right, so guys, I'm going to pull up my trading view here. And we're going to start on gold, and I think we'll look at SPX as well today. So gold futures, guys, is going to be the same concept as XAU USD. So if you're a futures trader or a Forex trader, it really doesn't matter. We can apply these fundamental technical analysis setups to both. But I'll just stay, you know what, I'll do XAU USD for now, and then we'll just we can compare it. But you can see the price movement is literally the same. If like this is the 1 hour chart on XAU USD, and this is the 1 hour chart on gold, you can see it's almost identical. So you don't really have to worry about which market you trade in when it comes to gold. So I'll go XAU USD. I'll close this here. Okay. So just real quick, Sean, we'll give a reminder to everyone or anyone that might have not been here before. So what Sean does is called a top-down analysis. And the very first thing we kind of look at is the higher time frame price action. Okay, so Sean, when I pull up this 4 hour chart, what is the main things you're looking for when you first look at this price action here?
The trend. I mean, the first thing you're going to identify in any chart is identify the trend. So in general, you should see an uptrend in that 4-hour time frame, right?
Right. Yeah, and we can clearly see that there is bullish momentum with the current pullback, right? So
Yep.
and this is the issue, guys. I will say, if you're day trading, this can be one of a huge issue. If you're going off a higher time frame trend for a lower time frame bias, well, sure, it's bullish here, but you would have gotten destroyed over the
Correct.
last 2 weeks, right? So you can't just look at higher time frame and say, okay, it's bullish, I'm looking for longs. It doesn't work if you're day trading. Maybe it works if you're swing trading. What you would do is, we can see it's trending really hard, right? And we would look at this key level here maybe and wait for a pullback into that zone to go long. So if you're a swing trader, then potentially the current price of gold could be a nice position for going long, right? But that's a swing trade technical analysis.
Right.
So what we're looking at here is we want overall trend, but then we also go down, and you're going to mark a anchored VWAP, Sean, on here anywhere?
Yeah, and I would even go out one more fractal to the daily on this one.
Okay, so go to the daily, and then the anchored VWAP, guys, is a tool in TradingView, and Sean uses it for all of his technical analysis. And by the way, these two lines are just two EMAs. We're going to be using those on the 1-hour chart. For now, I'll just hide them so I don't confuse anyone. Okay, so we have the anchored VWAP in TradingView. It looks like this tool. You can find it on the side over here, right here. If you can see my mouse, it's on the left-hand side there. So you just click on it and you manually have to place it. It's a really good indicator. You manually have to place it on a price point that you feel was a catalyst, right, Sean?
Right, or a significant high or low of that chart you're looking at.
Okay, so here, where would you ideally put the anchored VWAP?
Definitely on the daily, I would put on that all-time high in gold because it's on the chart. What was that on the date? Background
April 22nd?
Second, yeah. So that you need to have an anchored view off. So that's actually a pretty critical price.
Okay, so I'm going to click on it. So I take the anchor VWAP, I just click on the top of that candle, and then it automatically does the rest. You can see that, right? So we have this blue line, which is the anchored VWAP line off of that high, right? And what about down here? Is that a relevant price point you would consider anchoring or no?
You could go low of chart, or even like for gold, I like to do, I have it back. You might have to, when I'm looking on the widest time frame, I like it. Let me find my date here. I'm shedding some resources on my computer, so our stream, my viewing of the stream isn't so laggy. I like a gold anchored back. One second. Looks like from beginning of like January would be a good place to put it.
Okay, let's go take a look. So we have January like right here. Like January's about here.
Yeah. So that way you can capture kind of the bullish trend. Also,
although
okay.
Although I see what you're saying.
That all-time high anchored VWAP is
So
going to be the one.
Yeah, I'll pop it like right here, right when it kind of started to pop off, like right here.
Yep.
Okay. All right. So we can clearly see, it's the anchor VWAP's definitely bullish and stuck in an uptrend there, right? So we have that level as well. And is there any other level you'd mark up before we start working our way down on the time frame?
No, I want to be aware of those. We are aware of gold. If you look at that spike on your chart around May, was it 6th, where we had a spike up and then a sell-off, that is going to be a key price level where you notice that we recently crossed it and then recrossed it. We have to regain that level in order to set a new all-time high. So that's a significant price. There won't be any anchored V. You could put an anchored VWAP there, but I see that as a price level.
Let me just see what it looks like if I put one there. Yeah, it aligns with the other one anyway, so there's not much of a point, right? Yeah. But that's interesting, guys, where it aligns. Like it always ends up aligning with some of these other ones if you pick various points of clear catalysts where price hard reverses at some point. And that's what a catalyst would be. If you don't want to watch the news, look at the charts and you can see the date there was some kind of catalyst. You're going to see some kind of hardcore trend reversal, or where price pops off, like right here where it popped off bearish, right, from this high, and it just sold off for the following 2 weeks almost. So so I marked up this level here on the daily, so we can be aware of it. Would you mark up any other level here that
No,
might be?
No, not on the day, unless you wanted to mark that reversal there in May 15th when it hit that bottom and bounced back up.
Sure, we can just mark something there, even though we're so far away from it. It's nice to be aware of it, just in case, gold really does sell off and we're looking for an attractive price to buy. It's nice to have that marked on your chart, right?
Right.
Yeah. Okay. So from the daily, I'll go down to the hour chart, right? So we're working our way down here, guys, with our TA, and this is it's so important to do a multi-time frame TA because you get the context of the current price. If you're just trying to enter trades off of candle price action on lower time frames, you are going to get smoked over time. You're going to be dependent on luck alone. So that's why you want to do a higher time frame, work your way down, so you kind of have a bigger action plan for when price hits certain levels. And you can see here we have price in a key level that we were already looking at, right? So I'm going to pull up the 2 EMAs. These are the 9 EMAs and the 20 EMA. And and what are we doing with the EMAs on the 1 hour chart for our analysis?
So anytime you have a faster moving, so smaller number, so 9, moving below a larger number, EMA 20, that is a sell signal. So we got that sell signal on the hourly on your chart right around 3 a.m. on Monday, June 16th.
This crossover right here, right?
Yeah. So the EMAs crossed down. So although we are, on the wider time frames, bullish on the more narrow time frame, so hour, right? I like using the hour for my intraday trade because remember, when you intraday trade or day trade, as it's called, we're trading on the smallest fractals. So like you said earlier, you can't go develop your bias necessarily out of the daily and go trade the 1 minute. That's too wide. You're going to be wrong more often than not. So right now, the hourly is telling me that it's selling off. Even though within the daily, it's been bullish, you can see that retracement that was coming in. Now, so I'm looking for shorts right now. As long as that hourly is bearish on that cross, I'm looking for shorts.
Right. And I just want to express, guys, I mean, look at this price action on the 1 hour. I mean, if you follow just this condition where you're looking for longs when the 2 EMAs are clearly bullish in a lot of bullish momentum, right? We're not just talking about the one line is above the other one. We're also talking about the angle at which these EMAs are running. So very steep would be a very strong trend. More horizontal here. I mean, this is very choppy market conditions. So this is going to be very difficult to navigate through your day trading, right? But once we get these clean moves, and they last quite a while, right? We get these clean moves to the upside. Imagine all the opportunities here to make money going long, right? And the same with this crossover. Imagine the opportunities you can make going short. It's still very bearish here, right? So catching these long moves, that's such a big part of like taking advantage of the conditions when they align with your technical analysis, right? So we can see here. So if we follow your logic, Sean, this would have been difficult to trade in. This much easier, right?
Right.
These market conditions are rather difficult, you would say, to trade in.
Right. When they're choppy like that. But if you have your directional bias and you're looking for shorts, then that's when I jump down to my smallest time frames of 5 and 1 minute to match that same EMA cross. So if you look at, as a matter of fact, let me see here, match my chart to yours. If you look at like gold, its most recent 5-minute cross down occurred at 10 a.m. Eastern Standard Time, so roughly 2 hours ago. That would have been a short signal for me, which it was, and I took that.
Okay, so that's on the 5-minute chart?
Yep, you jump down to
Okay.
5 minute because you know that you're a short seller intraday.
Yeah.
And then you wait for that. If you look at the first, so if you go backwards from the front of the chart to that 5-minute cross 2 hours ago, look at what that paid.
Like this one here, right?
Yeah, when you align the hourly bias with that 5-minute bias flip, huge payment.
Well, we had a $20 move, like sniper entry to the downside at that crossover. Even here, guys, because look at this. We had the 1 hour bias for short. Like if you're going long here, just because the 5 minutes are crossing over, you're going to get cooked in this situation. But look here, same thing here. It crossed over bearish. So you could have entered here, right? It would have just gone in the profit back to a little bit of drawdown and then back into your profit if you have the ability to hold the trade through that pressure, right? So, and that's why I always talk about being able to have the mental capacity and strength to hold trades, because look how important it is when you're dealing with situations like this, right? Like let's say you're targeting $20 move and you're risking 10, right? At 2-to-1 in this situation. And you go almost halfway into your profit here, and you get a hard, like this, people don't talk about this when they're trading. This is the hardest part about day trading, is being able to withstand this type of pressure when you made good money so far on the trade and you have a hard reversal and it looks like it's going to go to the moon. And being able to hold a trade like this, like you entered the trade for a good reason, that you want to stay in the trade. Why would you exit just because price is bouncing around your entry point, right? So, and then obviously it comes down and it works out overall. So that's the psychology that really gets people, just being able to hold a trade like this without closing it at break even just because you're scared it's going to shoot up to the stop loss, right?
Right. You have to trust your trade plan. I know full well that setup right there will pay 85% of the time. But I also know that 15% of the time it's going to kick me out, and I'm perfectly willing to accept that on my risk reward ratio. And a lot of people will start to alter that because they don't even want to incur that 15% loss, 15% of the time loss, and then ultimately start incurring more and more loss because they're going to alter their plan.
Yeah. Yeah. And that's kind of the dark side where emotions can get to you. And then it gets worse because you micromanage your next trade and go outside of what you had analyzed and planned for. And then it would have worked out if you just originally stuck to the plan. And then it just kind of like gets in your head even more and kind of shatters that confidence a bit. So it's so important to stick to a systematic process when you're trading, because even if if you switch everything up out of your emotions and the trade actually works out in your favor, it's you're worse off over time because you didn't follow the system that you set up to that you know works long term, right? So you don't want to like trade on the fly like that because it sabotages you long term, in my opinion.
Mm-hmm. Yeah,
So,
and JPEth Chetty asked a question about do I enter at the close of the candle after the cross to confirm? The technical answer is yes, but the guys that trade with me live in my war room know that I look at even a number of things where I'll front run it a little bit, but that you can't front run things unless you have traded tens of thousands of contracts like I have, where you have experience. So the technical answer, JPEth, is hopefully I'm saying your name right there. Is yes. It's safest to wait for that closed filter candle that creates the EMA cross.
sorry, I just had to grab something.
Yeah, no worries.
All right,
Oh,
cool. Yeah. So looking at this, like the previous hour, it looks like we had like one good entry that you would have shorted based off of your top-down analysis on gold here, right? Which was around this price point.
Yeah, exactly. There were two short opportunities. In that there was let me find my. You had the one approximately 2 hours ago. And then, cause on that particular read, I hunt $10, like is typically what I'm looking for. So then you had one at approximately 2 hours before that, which, people watching this going, well, man, when do I make my next trade? Well, you set alerts, because if those EMAs, the yellow line on your screen, crosses back above that blue, that preloads or reloads for the next primary, what we call a primary read short. So, in other words, if we get price action up around 33.82 to 85, we meet resistance, and then it turns back down, you'll get another 5-minute EMA cross for another short read where we would hunt approximately $10. So as if you open up your computer right now and you go, hey, I'm going to enter a trade, you actually need to wait. Right. That's why I know a lot of people only trade gold. I look across about 6 different futures products, because at any given time I'm close to a read on one of them, and then I'll take the higher conviction one. But if you opened up this XAU USD chart and this is what you see, you set an alert for this thing to recross 33.82 to the 33.85 zone. Watch the price action, because then if you get selling come in, that's going to be your next short. So you've already missed the short, is my point. And you have to be patient. In the time that you sit at your computer and you go, hey, I've got 20 minutes to trade here. I'm in between whatever. Folks, if the read is not there, do not hit the buy or sell button, right? Set alerts.
Yeah. And you can set alert guys on TradingView just by marking up a price point that you're interested in watching how it's playing out in real time. You just put a horizontal line in there, and you can right click it and set an alert right here. Mm-hmm. Yeah, so super easy. You don't have to watch a chart 24/7. Set alerts, take advantage of that. And like Sean said, you can do it on multiple assets. I would highly recommend practicing if you're trading real capital or prop firm capital or whatever. Try to master one asset, and then if it's working on that one asset, then start to expand your arsenal, right? But trying to track 5 different assets at once, if you don't have the experience yet, is going to cause more negative side effects than it's going to be beneficial, right? So if you can make it work on one asset, you can make it work on multiple assets, period. But you have to start with one first, right?
Right. Yeah. And ADG asks, how does the VWAP tie in into actually entering the trade? So whether you use the VWAP or an anchored VWAP, those provide support and resistance, right? So I really like when I get an EMA cross that we previously talked about that goes through a predetermined VWAP, because that read breaks the support or resistance, whatever it is. I just have a higher degree of confidence in that trade. Now, if I take the read up against the VWAP. So let's say I enter the trade, I'm looking to hunt 10 points short, but the VWAP is 5 points below my entry. I know I'm going to run into support there. So I'm going to watch that. I need it to break it to hit my complete take profit. Right. And it depends. It's going to depend every time. I just know that that's generally strong support or resistance. I might elect to exit at the VWAP, which would give me 5 instead of 10. I might elect to watch volume at that point to see what it does, but go break even just in case it reverses on me, because it is strong support. So it's just another layer of support and resistance. And like I said, the guys that trade with me know that the best reads come when the cross occurs running through the VWAP as well. Right.
So yeah, and so guys, the anchor VWAP is quite far below the current price. I mean, we're talking on gold, it's like $65 away, right? So is that kind of like a nice thing to see when you're looking to go short based off of the 1 hour momentum?
I mean,
so far away from it.
It tends to be a price target. Now they said VWAP. If ADG means because the VWAP. So there's a difference between an AVWAP or anchored VWAP and a VWAP. So both of them are volume weighted average price. An AVWAP is one that you set. So as you guys watched Daniel set multiple of those as we started this, he's setting them to highs and lows and significant movement. Those are anchored to a specific time. Now, if you just talk about VWAP or volume weighted average price, that is automatically anchored to the same price each day, and that's the open price. So that just the regular VWAP itself will come into play on your intraday trades much more than an anchor that you have set on a wider time frame. So my answer is the same. My daily VWAP will uh, um, provide support and resistance intraday on those smaller time frames.
Right. Yeah. Because this is the standard VWAP, that indicator that I just popped on the chart. And the line's here, and it hasn't really been too relevant to the current price. And that's kind of why I like the anchored VWAP a bit more as well, because there's just so many. Like, I guess it depends on the asset too, like how often the VWAP is respected. But on this one, it just whips through it like nothing, right? So that's why I like the anchored VWAP. It's a bit more relevant because it's relevant to historical price action that has been like a key off of the key levels.
Mm-hmm.
Yeah. Does anyone have any questions regarding someone asked why we use the 9 and the 20? Is that just something that has just worked best for you in the past, and that's why you prefer those
so those
two?
are kind of industry standard. I mean, there's even an argument between the 20 and 21, but fractally they're so similar. 920, 920, 50, 100, 200 are kind of the industry standard EMAs to use when trading, depending on the fractal that you're on. So I use the 9 and 20 because now previously when I was trading, I used to add in the 5. The 5 EMA to really kind of look at acceleration, but I got rid of it. But again, the 9 and 20 being industry standard, and then as I built my system, I really saw their benefit being the smaller ones.
Right. And
so,
then, yeah.
I was gonna say, Wang's asking why 9, not the 10. Honestly, I don't have the answer for that. I mean, even in the CMT book, they talk about the 9 and 20, but never talk about the 10. That's a good question. I don't know why they look at a 9-day moving average versus a 10. If somebody knows or learns, shoot me a DM sometime. Let me know.
Yeah, and I think it would just depend on like the most used across the board as well, because the more big players you have looking at the same indications, the more likely it is that those indications will be relevant to the price action, right? So, yeah, and then someone was asking about the entry model, like the entry model for the 5 minutes. So the play now with the current price action, the play would have been to short right here, guys, based off of our top-down analysis. And this was a short that Sean took, and he says he usually target 10 points. Sometimes you go 1.5 as well. I've seen in your
yeah, especially on the mean versions of key levels, I'll go wider. But on a standard intraday entry, I'm looking for $10 in gold.
Right. And where would you normally set your stop loss here?
I would do like on that entry, I would have been initially I would have been 10 wide. And then what I like to do is confluence it to a key price level that's been recently. So sometimes I might have to expand to 12, or I can come under 10 and get to like 8.
Right.
But then I let it play out.
But you look pretty safe here because you're under 10 here, you're under 10 here. So that's a pretty nice level as well. And I totally agree with that. Like letting your stop losses, like widening your stop losses a little bit can really help your psychology and your overall trading experience, because it doesn't always go like this where it's a sniper entry, guys. Sometimes it bounces around, right? Like I showed previously in this trade, if we would have taken it here under the same conditions, it's going to bounce around. And when you have room for the trade to go into your stop loss without instantly blowing you out, that it's a lot easier on your mind, because think about the move you would have missed if you got cute or greedy and had your stop loss like right above this previous candle for whatever reason. If that's a strategy you were taught, right, you would have just touched that stop loss here, and then the trade would have dumped in your favor. And how many times has that happened to you here, guys? Like think back. How many times has the price just grazed your stop loss and then dumped right to your TP? And if that's the case, then your stop loss might be a bit too tight. So always consider, don't get so greedy. I know these huge risk to reward trades are nice, but in a prop firm setting as well, they are not so good, because your win rate will go down even though your wins will be big. But you don't want your win rate to go down too much, because consecutive losses are going to breach your accounts, right? We don't have a full live account of drawdown we can absorb. We only have 8% of drawdown we're allowed to have, or with a futures firm, you only have 3 or 4%. So you have to trade some of that greed for for flexibility. And look
That's a
at
good way
what's happening with gold right now, Sean. It's like kind of pumping back up through these EMAs, right? Like you
yeah,
said to look
yeah,
for.
you reload for prime. You just said alerts, reload, and we could get another great primary read short.
Yeah. So what do we want to wait for here? Do we want for these lines to cross bullish first and then back bearish?
Yes, like what we
Okay.
call a cross recross. So
Okay.
if you so price estimation, it's at the price. It's just above the price where we'll get the cross. I'm estimating that the read will come in around 33.81. So you don't want to go, well, I'm above that, so I'm cheating and grabbing a couple extra points. No, you got to wait for this confirmation. So we may see roughly 33.85, get price rejection in that previous cluster, and then turn back down in for a solid read. So I need to allow it to run up 4 to 5 points and drop 4 to 5 points, get my EMA cross for my confirmation, right?
Yeah.
Yeah,
And if you,
but I know
yeah,
I know that that's going to approximately happen around 33.81.
around 33.81 is around here. Okay. So you think it's going to recross
That's
over around
Yeah,
33.81?
yeah. I want to know where that's going to approximately be. I mean, I'll wait for the read itself, but like I said, it could run up 4 to 5, 6 points, and then turn back down, and it'll have to drop that
Yeah.
same to give me my read, because I needed the price action to pull those EMAs up and then recross them down to confluence my 5 minute with my hour.
Right. So guys, if you want to know exactly what that would look like, I mean, look at this right here. We had some bearish indication to go short here, right? And we didn't quite get the momentum. But if you were looking for another entry, then we just wait for it to cross. Like, let's say you wanted to enter a short, but you're down here at this level. Well, you shouldn't enter short here because half of that move could potentially already be done, right? So you'd want to wait for this price action to recross here and then cross over again to go short. So this is your second chance entry if you miss this first chance, right? So that's what it means to be patient, because think about if you would have said, "Oh, well, let's say I'm just trying to take market orders on a whim here. I just want to get in a trade." Well, okay, well, we crossed here. I missed some of it. Let me just try to go short here and catch the rest of this move. Let's say I just go short right here. And then I set that stop loss to $10 or whatever, like I was talking about. And then we just go way too hard into drawdown because our entry isn't exactly the best time to enter the market at, because some of that sell off has already happened, right? And sometimes it'll work out in your favor, but I think having this as a systematic game plan is going to be a lot more effective long term, finding those like higher quality entries on the price. So yeah, so we'll see what happens here. Like if we can get some buyers to come in, push price like up to here, right? And then it starts to consolidate. We're going to see that crossover of these two EMAs, and then that could be a really nice time to short somewhere around
Right.
there. You never know, right?
Yeah, my guys know. I mean, my guys know I love alerts. I set copious amounts of. Good thing they don't charge for alerts, because I would be broke. I set alerts everywhere, and we across multiple instruments, because I don't want to stare at them all. I let, and I can go on about my day. I get my alerts when I know what price action is. I'll take a minute, look at my phone, or come back to my trade desk when that setup comes, instead of just sitting here twiddling my thumbs, waiting for buyers to come back and then sellers to take over. I'll know when it happens because my alert works for me.
Right. Yeah, exactly. Yeah. Yeah, actually real quick, I want to talk about, just because we did a full breakdown of the analysis. Just a heads up, guys, I'll give you a really quick rundown on how we did this top-down analysis for a refresher here. So we started on the daily here. We just marked out some key levels here that might not be relevant, but they could eventually be relevant. And then when we marked out the anchored VWAP off of this previous high, and we marked up another one at the beginning of this bullish run way back here. And currently the anchored VWAP's not very close to the current price action. So it's not as relevant, but it's just good to be aware of that. The next thing we do, we go down to the 1 hour chart, and what we're looking for is we have the 9 EMA and the 21 EMA marked up on the chart here. And we're just looking for momentum, current market momentum or trend, to come up with our daily bias, because we don't want to be forever long or forever short when we're day trading, right? We want to, if we're only going long, we're going to suffer greatly when there's pullbacks on the overall higher time frame trend. That's why the 1 hour is a nice balance in between the two worlds. The 1 hour really connects the daily chart with the 5-minute chart, right? It's kind of like that bridge we can use to determine a daily bias to find good entries long or short. So because price action was clearly bearish, today we're looking for sells on gold until this changes, until this starts running bullish again. Clearly, we're going to be looking for shorts on gold. So, and unless it comes down to like a really strong anchored VWAP key level, like around here, 33.10.
Yeah, then you start mean reverting, so you go
Yeah.
against that bias.
Yes. So a mean reversion, Sean, is like when you're coming down to a very strong key level price point, and even though the trend is bearish, it's a very good opportunity to buy because it's such an attractive price point.
Right, exactly. When you have overextension, you have indicators that are telling you it's too much, or you can see it in the price action. You revert the mean, the normal price. So if it's, in other words, if we drop down to that 33.30 level, I think it's the level identified in gold futures. We drop down to that level, regardless of the hourly being down and the daily being down. I will buy at that level, and I'll zoom in on the smallest fractals to get confirmation of that, and I'll tighten my stop loss on the other side of it. So for you guys that follow my trades in the Student Alpha channel, you'll see I do that a lot, and I only do certain ones, but there are some of the highest conviction trades that I have.
Right. Yeah. So you could. So if you're kind of this zone you're talking about, this is the future zone you're talking about, but we're not actually USD. You would just set an alert like at this level. So when it comes down into that zone, now you're watching price action on the lower time frame for some kind of entry signal.
Yep.
To get in long on that trade. Right.
Yeah. And I think you and I discussed it when we were on a Zoom the other day. What is that signal? I like when I've identified a key level, okay, just like you have here. You could actually buy the level and set a stop loss based on that. But for me, the true mean reversion signal is either going to be the 1 minute cross after hitting that level. So positive, because if it's dropping, you're going to do the opposite. Mean reversion is the opposite. You're going to buy the 1 minute cross, or in this example, the 5 minute cross would give you your confirmed entry that level has held for mean reversion. And then what you would do is you would set your stop loss below the nearest swing low, and that swing low is somewhere in that zone. So to me, it's lower risk, higher reward, as most mean reversions are. Now, I don't play mean reversions every trade. I prefer to do what we have going from the 1 hour to the 5 minute. But when they present themselves like this, the risk is low compared to the reward, and I have high conviction for them.
Right. So you're saying if this was your interested entry zone, if price came down and then there was a clear overpowering of buyers and those EMAs crossed back bullish, that would be a really nice signal for you to go along with those buyers. Yeah.
Yep. And then you set your stop loss.
100% agree. Yeah. Yeah.
Yeah. And then you just set your stop loss on the other side of that swing low, which is probably somewhere near that zone.
Yeah, exactly. Yep. Yeah. Do you like to see like a really strong sweep? Like if a 5 minute candle comes down and then buyers just completely come in and just create that nice long wick where it looks like some kind of liquidity grab, and then we can see buyers are starting to take over, the EMAs cross. Is that a better sign for you to see those nice wicks?
I don't know that if the word better is the word to use there, but when you get a candle with a long wick on the bottom or a doji, that candle in and of itself signals reversal, so which would coincide with what you're saying. I would like, so to answer your question, I do like those signals. I would also like just a strong ignite candle there. So either one. So you might just get a firm group of buyers to come in and give you a nice green solid candle, real body of a candle, or you might get that what we call a dragonfly doji, where it kind of looks like the letter capital letter T, where you get that long wick and then buyers take out the sellers, and then if the next candle's green on that, you're good to go. So yeah. I mean, candle readings, lessons all into themselves. Unfortunately, a lot of people try to trade only candles, which you cannot do very successfully. But when you use them in confluence with those key levels, they tell you a lot of information.
Right. Yeah, that makes sense. So guys, I'm going to give you a quick rundown to put all this into context with prop firm trading as well, because because it's nice to know, it's nice to have a good solid entry model strategy, but if you have no idea of how to trade the risk with a prop firm, well then it's long term, it's you're going to get cooked as well. So let's just say we got in on this trade here. And what I like to do is I like to go for my trade setups, I like to risk about one on a Forex challenge, like a two-step Forex challenge. I like to risk around 1.5 to 2% per trade. And then I'll usually target a 1 to 2 risk to reward, because that way the 1 to 2 is a bit harder, but that way your winners are always bigger than your losers, and you don't have issues with prop firms accusing you of hedging, because if you do a lot of 1-to-1 risk to reward trading, they're going to tell you you're reverse trading. And we had that issue a few times in the past where we weren't reverse trading, but they said we were because all our trades are 1-to-1. So this is kind of nice. It's a nice middle ground, 1 to 2. It's not too crazy, but it's also reasonable enough to where your winners are going to really make an impact on the profit of your account. And then with your stop loss range, Sean usually marks, like, goes above his base point is 10 points on gold, which is a very smart range, and I'll show you why. If you go to the 1 hour chart and pull up the indicator called ATR, average true range, and I talk about this a lot on my Instagram as well. This is such a powerful indicator. If you want to trade any asset, just use this as a reference, pull up the 1 hour and see this red line down here. Take a look at where it currently is, or you can actually squish it up a bit and see what the average is, which is around $11, $10 to $11, which is very close to Sean's base stop loss. So if you don't know how big your stop loss should be for your day trade on SPX or EUR-USD or USDJPY, go to the 1 hour ATR, take a look at that, and then consider that pip range or that price range for your stop loss level. Just start there. If you start there, you really can't go wrong. The biggest problem you're going to have is if you go to let's go to USDJPY. I'll pull that up somewhere here. Where is it? I swear it says it found it. Where is it? USDJPY. Oh, there it is. So let's say I go to USDJPY and I don't know what I'm doing in terms of my stop loss, and I set up my stop loss like way too tight. It comes with so many problems, especially with prop firms, because your positions are going to be very high risk. The tighter your stop loss is, let's say I do like a 10 pip stop loss on USDJPY, right? You're going to need so much leverage, and your lot size is going to be so huge that prop firms are going to flag you for gambling if you do trade setups like this. So go to the 1 hour ATR. Let's take a look, and we can see that that's around a 30 pip average. So rather than a 10 pip, it would be much better to have a 30 pip stop loss for this asset. And you can really just use that for every single asset. Just go 1 hour ATR, boom, and start there. And then you can always adjust it a little bit. Like if you can do your technical analysis, and if you have a level that you want to make sure you're far away from, then you can always expand it or you can reduce it a little bit. But just around this level is going to be perfect for you to use for your risk setting. So 1 hour ATR and 1.5 to 2% per trade, and just look for one trade a day to start. You don't need to go crazy. You don't need to do 3, 4, 5 trades and blow the account or pass the account one day. Look for one really high quality trade setup so you don't have to look at the charts for hours straight, and just take that one at a 1 to 2 risk to reward even, and then you'll be doing solid long term. So that's what I would do. That's what I do to pass challenges all the time and also hit payouts. It's just like the best advice I can give for anyone that has been struggling with prop firm challenges. Sean, how was your experience with trading your first prop firm challenge last week?
Yeah, what you and I have talked about. We're talking about this offline. The thing that I've had to learn is not to make a ton of money on my trades, because I got the consistency rule, right? I'd message you. I'd hit a couple of my reads would have paid, two contracts, when I was trading gold, $2,500 to $3,000 for that trade, but really want to limit it to like 1550. So that was a struggle. The one trade I hit for on another eval, I hit for 2,500, and I did learn that I was actually doing very well in that eval, and it got breached because I was in my bracket. This is a learning curve for me. I was in my bracket up against 5 o'clock, so you can't hold them past 5 o'clock. So I thought they would automatically close me. Well, they did, but they also breached my account. I just thought they'd close and I was in the money. I was in the money like $1,100. So I would have passed that challenge, but they're like, nope. But I've placed with the one I've passed. And for those that don't know, when I passed the take profit one, they immediately closed my account because my first day I had over 10% profit. They closed my account and they're pushing me over to Pro Plus, and they're making me wait 4 to 6 days because apparently I'm too accurate, because I was like 9 for 9, or like not 9 for 9. I'm so far I'm like I'm 11 for 13 on my trades. I've been tracking them, so I'm waiting for that Pro Plus account to open up. So while I'm waiting, I opened 3 more evals, and I'm batting 1,000 right now for
there you go.
those trades.
And the concepts you use to pass those challenges are exactly what we're showing here, right? Like, you're not doing anything.
You're right. It's exactly what I'm showing you right now.
Yeah. So, I mean, it works that's what I'm saying, guys. Like, this style of trading that Sean does and that he teaches and that I've learned from him as well, is super effective in the prop firm space. It's like almost perfectly designed because it's not over risky, but it's reasonably aggressive to where you can pass challenges in a minimal amount of time and high quality, high win rate setups. So that's why I always have him on here to showcase like his entry model strategy, just because it aligns so much with what we do on the Prop Firm Kid Instagram as well, and in the Discord here. Okay, we can take a few questions, I think, before we bounce. If anyone has any questions, let's just do that. I'm going to stop sharing the screen, and we can Where's my screen? Here. Stop streaming. There we go. Yeah, if anyone has any questions, just feel free to ask. We'll do a few here before we bounce.
So Aizen, just make sure you're hourly and find out where your hourly is up or down, and then trade the 5-minute in alignment when that happens.
Also repost this live on the YouTube, guys. So if you want a refresher, you can go through it as well at like 2x speed. It's really, it'll be there available on the internet. I'll make sure we post it on the YouTube within the next 24 hours. So
yeah, for you guys that are making it in late because you couldn't make the start time, definitely go back and watch the recap video.
What indicator do you use for anchored VWAP? So there's an anchored VWAP indicator on the trading view. And we did go over today where we would mark those levels. So you just manually click on the chart, the anchor VWAP, and it will pull up the anchor VWAP line. It wasn't very relevant with the gold today just because it was so far away, but it just creates price points to look at for the future as well, just so we're aware of them. Sean, do you have a Discord in your bio on IG, or where do people find your Discord?
Yeah, so if you on IG, guys, I got 2 links in there. One is the link to the Prop Firm Kids Discord, but then I have a link to my website, which gives you all the information where you can join my Discord to trade live with me as well. All that information's in my Discord, or in my Instagram bio.
Right. What confluence do you see when you set up a pair? Yeah, we were talking about this. So the confluence we're looking for is the 9 and 21 EMA to align with the 1 hour 9 and 21 EMA, and we're looking for some crossovers on gold, right? So or on gold or on any other asset like SPX. You can apply to any asset there. But basically, the main confluence is the EMAs that we're looking for.
Right.
It just signifies a shift in momentum, typically, and to align with the 1 hour momentum. So basically, what we're doing, it's not too complicated. The main thing we're doing is we're entering in with the 1 hour bearish momentum, for example, but we're entering in on a pullback. So price is falling, buyers come in, and there's a pullback to a higher attractive price, and then once sellers come back in, those EMAs will cross over, and we can enter in with the continuation of that momentum. It's pretty much the simplicity of how to enter the trade there.
Sure. I mean, Azen asked a good question. Why are you guys doing this for free? Most of them make millions out of selling courses. So let me speak to that first, and Daniel, maybe you can.
Yeah.
First of all, if you go, not only am I a 7-figure trader, so proof is in a concept. The way I trade, I actually have a formal education in this. So through a pathway through the CMT, where there's only 5,500 people worldwide who have reached the level of education I have in the stock market. So of course I do sell products. If you go to my link in my bio, I sell a course. I actually sell 2 courses. I have a trading made simple course, and then I have a futures trading course, and then I have a paid for Discord if you want to trade live with me, because the advantage of trading live with me is the fact that you have my education experience to kind of walk you through these trades. But I do a lot of this free information for proof of concept, right? Like I do every Monday through Friday at 9 a.m. Eastern Standard Time. I'm live on Instagram, talk about my trades for the day for 15 minutes and answering your questions. And then I do these lives for free with Prop Firm Kid as he's building this out for proof of concept. Because if you gain anything from this free knowledge, imagine what you would gain from the paid knowledge, right? So I think that's important. A lot of traders out there on the social media and influencer world, they make their living by selling courses. They don't make it trading. I do just fine trading, but I'm a natural born educator. I like doing the teaching part. I don't need to, so that's why I also do the free stuff for basically proof of concept.
Yeah, absolutely. And I feel like, and I think it would be nice if everything could be free, right? But the benefit of having a paid service is that it gives you a group of people that are really eager to learn, and it's not too big, so you can really focus on each individual that has kind of making that takes that investment to like, hey, like I'm willing to like go the extra mile and learn a little bit extra in your group, for example, right? So that's kind of like why even if you don't necessarily need the money, like I'm sure you've made 7 figures last year trading day trading, right? You don't need the $5,000 a month that you're going to make from your course or whatever it is, or your group, but it's nicer because you're an educator, but you only want to educate the people that you're not wasting your time on, and that kind of filters out a lot of those people.
That $199 a month or whatever it is that they're going to spend tells me that they're serious to learn, right? So
yeah, exactly. Yeah, no, I totally agree with that. Yeah. Okay, guys, we're a quick update on the VIP Discord as well. I'm working on it. We're aiming to launch July 7th. I don't know. We're still really getting our whole backend system dialed in. The Discord's going to be like a Discord you've never seen with the tech in there. So I'll send out an update email soon. But yeah, for now, we're just in development. So before I launch it, I just want to make sure everything's like bang on, because I want to make sure if I ever charge anyone for anything, it better be something that pays for itself. I'm not going to deal with the stress of having a bunch of angry people wanting their money back, right? So
right.
not my cup of tea. I'd rather just stay a trader locked in my room and not talk to anyone if that's the case. Right. Okay, we're sorry guys, I can't answer all the questions, but we're gonna leave it there because our time's up. But we're gonna do this again next week, likely. Should we just do it every Tuesday, or does Monday work better for you, Sean?
I could do Tuesdays at this time would work, or Monday's even more open. We can figure it out and decide, but it'll be one of the 2 days, guys.
Okay, I think Tuesday's nice because we already get some weekly price action playing out, and then we can kind of look at the rest of the week. So I kind of like Tuesday as well, but we can always I'll send out a story and email for the next for the next session, guys. So appreciate coming out and hope everyone has a good day.
All right. Enjoy, guys.
Yeah. Bye-bye.